Well, thanks to all the speakers for a really interesting set of contributions. We've now got about 40 minutes to discuss this and take questions for the panel. So who would like to start? And could you say who you are, where you're from, please, when you get the microphone?
Thank you. Ian Hayes, I'm here as Vice President of the Confédération Fiscale Européenne. I have a question specifically for David in relation to in what ways we should become attractive to business as either headquartering or as a location for activities. Because if you look at the patent box legislation, that in itself would seem to indicate that Pfizer are looking here as a very good place to locate activities, and to do so coupled with a takeover, apparently hostile at the moment, if it succeeds, of AstraZeneca. Now, thinking about that, there are lots of questions that come up. The first is that Pfizer may well be using funds that have been generating outside the United States, which have not been subjected to taxation within the US, and that there are questions that arise from that. But those questions are more concerned with the whole issue of investment and ownership and headquartering. The other side is that this may well benefit us because it will create jobs in terms of R&D. It will also mean that we will get more and more intellectual property being located here, and that I very much presume is in accordance with the government's wishes. So I suppose the question that I have got is, in terms of making the UK an attractive location for multinational business, does the government have a preference for whether it should be a location for activity or a location for headquartering? And if it's the latter, are we going to see maybe a spate of takeovers by US organizations of UK businesses, so that we will begin to see a demise of global corporations headquartered in the UK?
Well, I think there's a lot in that question. In terms of what are we trying to get to? I mean, ultimately, of course, we want to get economic substance to the UK. We want jobs and investment in the United Kingdom, and we believe that we offer a really good environment for economic substance to be here. But it's not entirely an either-or issue, because it is good for the UK if European hubs, global headquarters are located in the UK. It adds to a cluster effect. It's good for professional services. I think it's got to be good in terms of, if you're making if we're competing for a location of a factory, say, so we're very much talking about economic substance here. If you've got a head office already in the UK, if you've got your senior management already in the UK, it gives us an edge when there are other jurisdictions that could be chosen. So they're not entirely separate debates. Yes, we want economic activity here, but yes, we'll have the global headquarters and European hubs as well. I think one other point I would stress, and I'm keen not to get too drawn into the specific transaction you mentioned, but I think it's very much the case in terms of the discussions that businesses have with HMRC when they're looking to do more in the UK, is that, of course, it's a question of what does the law say, and what qualifies an entity to be domiciled in the UK, etc., etc. But in an era where there might be change, the most stability and certainty that can be offered to a business is one that says, align as much as possible your tax with your substance. And I come back to the point that I made in my speech, is I think the UK is very well placed in terms of being a great place for substance. our skills base, and so on, as well as being a very good place for a business to be domiciled because of the tax competitiveness. So, as far as we're concerned, we want it all.
And David, just to check on that, in cases where a company was not going to employ anybody, where their headquarters was overseas and they were purely having the holding company in the UK, you still think it would be, we should welcome them?
Up to a point. I mean, we're certainly not going to stop businesses in those circumstances, but the game that, the objective is about economic substance. And I suppose in the environment where we are just talking about a minimal presence here, whether it's under the current environment or whether it's under where BEPS is going to take us, that inevitably involves a degree of uncertainty and instability for those businesses. So we like it when businesses want to come to the UK, but we like it more when they want to bring jobs and investment in the UK, and that's ultimately what our tax reforms are about. And I think that's very much the point that you were making in your question.
Thank you.
Tim Davis, Head of Tax Mazars. My question is, when does one country's competitive tax advantage, for example, to attract multinationals, become discriminatory to another country, and how do you deal with that? And the linked question is then, does this type of government or country competitiveness naturally lead to some of the complex structures that have been criticised in the media and in public?
Yes, Chaz.
Bear with me, sir. Thank you. Please speak directly.
Thanks. Chaz Rajari, Head of Tax at ACCA. It's probably directed towards Tim, but also Mark for David. In terms of tax simplification, we certainly do support the idea of a tax simplification body, and we wrote in County Age about it about 14 years ago. And so very glad that the government introduced that in 2010. What I'd like to say, though, in terms of UK competitiveness and into the mix about consultation and markers about legislation coming up, we just finished, I was on the committee looking at partnerships, and we finished the work in December, about mid-December, and just a couple of days before that, the LLP legislation appeared in the draft finance bill, which nobody expected to look that way, and kind of ran a slight coach and horses through the kind of work we were doing and didn't make our work complete. So I just wonder why, on the one hand, the government is asking the Office of Tax Simplification to conduct certain areas of work, and then from left field, other legislation comes in, which probably from the outside don't look very good either.
Perhaps we'll take one more from Paul, and then we can answer them.
Richard Tether, Bournemouth University. Following on from the last couple of questions, if a UK business started using things like the patent box regime in other countries, they'd probably find themselves up before the Public Accounts Committee being asked why they were engaging in improper tax avoidance. If we're going to be competitive in reality rather than just on paper, aren't we going to have to roll back a lot of that tax avoidance rhetoric and actually allow businesses to benefit from these tax regimes that we're putting in place?
So, David, perhaps you could make start. The first and third question, I guess, go together.
Yeah.
The discriminate, what's avoidance, what's competition.
I think let me give an apparently easy answer, and I recognise that in practice it can be more complicated. But essentially, I think we've got to work on the basis of a close alignment between economic activity and tax. And that, I think, is the way in which one can justify to the public, and I think there is a role for businesses to do more to justify their tax affairs to the public. I think it's the way that we can explain as politicians what we're doing, and I think this is genuine competition. There is nothing wrong with tax competition. I've just delivered a speech which is all about how the taxes, how our tax system is competitive. Just spend a week in the US making the case the UK is competitive. There's nothing wrong with competing in terms of the tax that is paid on profits relating to economic activity that is occurring in your jurisdiction. Where I think there can be difficulty in terms of the public debate and in terms of the current international structures, if there are ways of manipulating the system so that, strangely enough, all the tax tends to be paid in a jurisdiction where the tax rates are very low or non-existent, and it really is unlikely that a business is doing a huge amount of its activity in that jurisdiction. So that's how I think we can try to square that circle. That's where I think BEPS needs to go. That's how I would say, in one case it's about being competitive, not about being harmful or unfair or discriminatory. In terms of that public debate about, it is not tax avoidance to locate your activities in a jurisdiction where the tax rate is lower. And I don't think most people think that that's the case. That's not to say there haven't been newspaper stories that have given that impression at times, but I don't think that's really where the public are, and I think we need to be prepared to make that case.
Thank you. Do you have any comments on Chaz's point?
Yes, sorry, on tax simplification. Look, I think in terms of the LLP legislation, we made it very clear that we were going to legislate in this particular area. We believe that what was happening was essentially an unfair arrangement, not so much tax avoidance as such, but an unfair outcome from the tax system. So we made it clear in the last budget that we were going to take action in this area, and that was going to feature in the finance bill, and that therefore we would publish, as we normally do, the draft legislation at the time of the finance bill. I think the OTS were very much aware that we were, although they were doing work in partnerships, we were looking at this particular area and we're going to legislate for this area. I think the OTS has done a remarkable amount of good work. I think it has fed it, well, a large number of its recommendations have been implemented. This finance bill I'm taking through has got a lot of OTS recommendations within it. But on the broader issue of tax simplification, there are various tensions there between, as we've heard, competitiveness, between making sure that there's a fair outcome and also achieving simplification in a period where we haven't had large sums of money to throw at issues, because tax simplifications often involve winners and losers, and most of the noise tends to come from those who have lost out. I think we've made a lot of headway in making our tax system simpler. And also, to follow on one of Tim's points, as there is greater use of new technology, as businesses are able to utilize digital means of dealing with the tax system, I believe that over the years ahead, this is more an issue for smaller businesses, admittedly, not for larger businesses, but for smaller businesses in particular, the interaction with HMRC should become much easier, much simpler, and more transparent, and I think there are some big wins to be gained from that.
Thank you. Could we start with Paul Morton, and then we'll take a couple more questions after that? So, the third row.
Please speak directly.
No, thank you very much. Given that David's constituency and my home, and I'm Paul Morton from Reed Elsevier, are at the end of the Metropolitan line, I was wondering about asking some questions about public transport today, but I won't do that. Instead, perhaps I could return to something touched upon in the Lord Mayor's address, which is that individuals considering an international move are very interested in the competitiveness of the UK. And my question concerns international executives and assignees. And it's a question for the panel, really. Is the tax regime for internationally mobile senior business people sufficiently competitive and simple, or is there more work to do there?
Thank you. Sarah Luder, Head of Tax at Slaughter and May. Going back to the headquarter issue, that headquartering in the UK, clearly it's better if there's more substance in the UK, and it's really a question for David, because one of the trends we've been seeing is companies coming to the UK for tax purposes, but perhaps not using the UK as their place of incorporation, which would give more connection with the UK. And I just wondered if the government was also looking at why that decision was being taken and whether there were any steps that could be taken to make the UK as a place of incorporation more attractive as well.
Yes, where's the microphone? Okay, let's go.
Thank you. Louise Higginbottom, Norton Rose Fulbright. I had a question about our legislative process, which is the one of the things we find puts off people coming to the UK is the proliferation of our anti-avoidance provisions. I think they're fairly happy with the GAR, but the increasing number of TARs appearing in the legislation, I think, does create an area of uncertainty, which is something which is a major disincentive.
Okay.
So,
Fine,
yes,
right.
I think they're first to you.
Yeah, they're first to me. First of all, this is directed to Paul, but thank goodness for the Chiltern line is all I can say. But on your more substantive point, in terms of international executives, I mean, we have made some changes within the system. We have provided a statutory residence test, which has been long called for by the tax professions to provide a degree of clarity to this. Again, this is an area, and it's a similar point to the one I'll make with regard to TARs. We have a challenge as a government to protect our revenue base, to ensure that we collect the taxes that we think is due, to make sure that it is a tax system that is perceived as being fair, alongside a desire and a need to be competitive. And you know, there is always a balance that has to be struck. You know, as far as possible, we want to have lower rates. Aggressive tax avoidance can put low rates under threat, which is why we have to take action in terms of particular behaviour that we think is going outside what Parliament intended, and hence, you know, that's why there will continue to be targeted anti-avoidance rules in addition to a general anti-abuse rule. And in terms of international executives, you know, we believe we're striking the right balance, but you know, again, be interested to hear views, and we'd need to consider that. On the point on place of incorporation, I mean, I think it's one that I mean, curiously has been raised with me a couple of times just in the last 7 days or so, in terms of transactions that are being structured in such a way that the incorporation might not be here, but quite a lot else might be. And again, you know, willing to look at that. There is a lot of competition in terms of where businesses need to be incorporated. A lot of the issues are not so much, if I can put it this way, wearing my part of tax, but part of company law as I understand it. And again, I think there's, you know, something that we would be willing to look at, but before making any promises in there, I think it's one we'd need to have a proper understanding of what we could do and what would be the consequences of any changes in this area. But I'm grateful for the point.
And Louise's question about the legislative process.
Well, I think in terms of TARs, I mean, it comes back to what I was saying. It's about striking the right balance, yeah, if there is, and I sometimes put it this way, as the minister that gets presented with a submission that says, you know, this is what our regime is designed to do. This is what some businesses are doing, and this isn't consistent with what our intention was. This is costing the Exchequer for argument's sake, 100 million, or the revenue at risk is, for argument's sake, 100 million pounds a year. That's 100 million pounds that could be used in other ways that would benefit our competitiveness more, or assist in helping people with issues to do with high taxes and so on. I think it's very difficult in those circumstances to say, no, we're not going to put in that TAR, we're going to allow something which looks like avoidance, looks like an abuse, to continue. And so there will continue to be TARs. What we're trying to do is strike the right balance so that we can have those low rates, but make sure that the tax system works in the way that we intended, and not in the way that some clever planning has permitted.
Thank you. Vanessa, if I could just add one point on the on Paul's question on mobile executives, because obviously we do tax returns for many thousands of them. And what I would say is that we saw a distinct reluctance on the part of mobile executives to come to the UK when we had a 50% tax rate and we were monkeying around with the non-dom rules. And we saw real-life situations where people were appointed to jobs which should have been in the UK, but they made the decision to try and do those jobs from elsewhere. My perception is that as the non-dom rules have settled down and the tax rate has come down, that has become much less of an issue. But I think it is a warning that says if the rate went back up again, or we started to hit non-domiciles more, that could swing back the other way.
That's a very good point I should have made.
May I just both second that comment and add the need for joined-up policy in government, because the comments on immigration and controls or limitations around that, together with high tax rates, we have a lot of professional services provided by mobile professionals, and many times they can choose where to live as well as we can choose where we would want them. And there's not a tipping point where you move people out, but there is a definite disincentive to bring people in when there is uncertainty. And I know you can't do anything about potentially the next government, but there's those messages that create the uncertainty that make a difference.
Thank you. Could we take some points from the back half?
Stephen Herring, Head of Tax at the Institute of Directors. We've been very supportive of the government's corporate tax reforms over the last 2-3 budgets, but of course that doesn't really mean that you don't want more. Now, the one area about substance that the Minister rightly commented on, where we'd like to see more substance, is that perhaps the Achilles heel in the tax system in the UK but not about now locating very senior employees, executives, the top investment bankers, but the more junior management and middle management who face currently a higher rate of marginal tax in the UK than they would in the United States, which we might not be surprised about, but also, as the French ambassador pointed out, in France, that we're more disturbed about. So I wonder if there would be, if the Minister considers that that might be an issue that could be looked into to see whether we could attract more substance and more value to UK PLC by addressing the issue for junior and middle managers.
Bill?
Bill Dodwell from Deloitte. Some of the speakers have talked about HMRC and whether they are engaging in antagonistic behaviour, as I think Jane McCormick referred to it, and Simon Henry talked about cooperative compliance. Do the panel think that we have the right investment in HMRC that the country really needs, or are we cutting too much?
And one more, Chris Sanger, perhaps?
Yeah, Chris Sanger of Ernst & Young, or EY, Head of Tax Policy. If I could just ask the panel, just in relation to what both David and Simon said, about the CT roadmap itself was seen as a really forward-looking document setting out where policy change was going to come. If we look forward now, we've come to the end of that roadmap. We talked about stability, and Simon talked about letting things be stable. What is the opportunity of getting a roadmap for the other taxes that we've got out there, like for the taxation of individuals, so we can give certainty around the rest of the tax system, at least a sense of direction, so businesses, when they're looking to come to the UK, really know where at least the direction of this government is going to be?
Well, first of all, Stephen's point, which is about those earning above 100,000, where the personal allowance is withdrawn, so they end up paying a high rate of tax. I think look, it was an element of the tax system that we promises there, because unlike the 50p, the reality is that it does raise some revenue. The issue with 50p is that people had lots of choices and would locate in other jurisdictions and so on. People earning between 100 and 120,000 pounds have aspirations to earn above 120,000 pounds. It doesn't result in quite the same behavioural effect. I'm not saying there's no behavioural effect. It doesn't result in quite the same behavioural effect as the 50p rate did. But it's clearly something that we would want to keep under review. I'll just take, if I may, take Chris's point next, because it's connected, which is about roadmaps and so on. I think the CT roadmap has been a great success. What I hear consistently is that it did give business, and it does give businesses, a degree of stability and certainty. And there's an interesting question as to whether we would return to that were we in power after the next election, sort of early in the next Parliament. I think in terms of other taxes, the case for a roadmap is not as strong. Partly it's because corporation tax is one that is absolutely fundamental to business decisions to a greater extent. To be honest, corporation tax is a relatively small part of the tax base, as we have heard, and the advantages of setting out a long-term approach outweigh the disadvantages for us as policymakers in losing our flexibility and making all our decisions, if you like, very early on, and then saying we're going to stick to it. And it's extremely difficult to do that with, say, income tax, just because it is at the heart of public debate, and it's such a large sum of money that you're inevitably going to respond to the economic circumstances and the political circumstances over time. So I think it's unlikely that one could do the same for personal taxes as one has done for corporation tax. Turning to Bill's point about HMRC resources. Yes, it is the case that HMRC has faced a number of budget cuts over a long period of time, predating our government. But what we have done as a government in terms of HMRC financing is to, yes, look at it very closely. It is a department that does a huge amount of administrative tasks, which new technology is able to do much more cheaply. HMRC is an organisation that certain things used to require a huge amount of manual work is now done electronically, and of course we should be able to find efficiency savings within it. And I think if you look at HMRC's record in terms of its compliance yield has gone up and up and up, and will almost be double in the course of this Parliament to what it was in aggregate over the last Parliament. In terms of customer service, yes, there's further to go, but in terms of answering the phones, in terms of responding to letters, HMRC's performance is better than it was 4 years ago. And in terms of dealing with those large and complex businesses that we've spent much of the afternoon talking about, my sense is that HMRC continues to do a very good job. Of course, we always have to review it. We always have to make sure in slightly different economic circumstances we've got the right staff in place, that they've got the adequate skills and so on, and we monitor that very closely. But I think HMRC is doing a very good job.
Anything anyone wants to add? Tim?
Yeah. I'd just add that I think where there is a bit of a gap at the moment is how best to help the smaller businesses. And maybe, I think it would be quite interesting to invest a bit more in that, because at the top end, it's quite easy for businesses to get help, to get certainty, if you like. For smaller businesses, it's actually quite difficult. And finding the right person to speak to, and then if there's a follow-up, managing to speak to the same person is a challenge to them. And interestingly, some people even say, remember the days of the VAT visit when you just started and the VAT officer would come round and sort of help you. And that's what people are asking for. Now that's quite labour intensive and everything, but that's an area that it would be good to think more about.
If I may, just to reiterate around the cooperative compliance, I would agree wholeheartedly that large companies have an advantage. We're well resourced, but with a cooperative regime, the amount of time and effort that HMRC spends on us can be significantly reduced to everybody's benefit, which reduces resource and time to support the SME sector, where that support, I think, is more valid and valuable for the economy at large. So more cooperative compliance, therefore more resource without spending any more money for the SMT sector is a good outcome.
Some people have been waiting patiently, and we've only got another 10 minutes to go. So could we have a speaker here and back there?
Does the panel consider? Does the panel consider that the UK affecting some of the BEPS proposals could make the UK less attractive to multinational businesses?
Sorry, could you just say who you are? We missed that.
Sorry, I'm Steve Newcombe, HSBC.
And here?
It's Rafe Cunningham from International Tax Review. I have a question for Mr. Henry. There was a survey of global CEOs published last week about the economy, which said apparently that 59% of CEOs were in favour of country-by-country reporting. Firstly, is that a surprise to him? And secondly, is your CEO one of those 59%?
I suppose it depends which flavour you go for, doesn't it?
There's one at the front and here.
Hello, it's Eric Tomset. Just a comment, really, rather than a question on the Minister's statement that £100,000 of income was amongst the top 2 or 3%. When you're dealing with a foreign worker coming to the UK who's got a lot of extra allowances necessary just to keep them the same as they would be in their home country, that often, and the grossing up tax effect, that's often only about 30 or 40,000 of real salary, so you're actually hitting quite low-paid people.
So again, David, would you be able to start?
Well, just on that last point, my point was really that, as members of Parliament, as ministers, we're accountable to the general public, and we have to justify every decision that we make. And in terms of reversing the withdrawal of the personal allowance, that would be a significant cost to the Exchequer, which would be going to people who are earning significantly more than the vast majority of people in this country, and that's something that we have to address. In terms of BEPS and whether that could make the UK less attractive, as I said in my opening remarks, BEPS it's a negotiation. There will be compromises. Not everyone will get absolutely everything that they want. But in the very broadest terms, if BEPS goes in the direction that we think it's going in, which is more closely aligning substance with tax, I think that works in our favour, because as I've said before, I think we've got a good environment for substance and we've got a good environment for tax. And you look around the world, and most places are either good at one thing or good at the other. Not that many are good at both. And very quickly, I know it was a question more for Simon, but on country-by-country reporting, the position that the UK has taken is that we do think a country-by-country reporting tool for tax authorities would be helpful for those tax authorities in risk assessing multinationals. I think it's got a valuable contribution to make. I know that one person's country-by-country reporting, the term can mean different things to different people, but I think in terms of what we're talking about, I think it is something that can be useful for tax authorities. And more widely, as I've made clear many times over many years now, I do think there is a greater role for businesses to explain how their tax affairs work, because it is a debate that has not always been characterized by a well-informed discussion. And the more that businesses can do to inform that discussion, I think the better the environment it will be for those of us wanting a competitive and dynamic economy.
I very much agree, David. In principle, tax transparency is supported by the business community. It's just a question of to what level of detail, and we all fundamentally support the exchange of data between tax authorities. Certainly the people that I talk to, on an open, transparent basis, and with it, clear, consistent principles, and in the event of dispute, i.e. double taxation, that there is a mandatory binding arbitration process. That, I think, is a really important outcome that could come through. In response to the specific question, it doesn't surprise me, no. I think that all chief executives are well aware of the need for societal acceptance of their activities as much as fiscal acceptance and shareholder acceptance. You know, governments, business, society working together is the only way that we can help create the wealth and the economic growth that we all seek. And therefore I'm not surprised at all. At the highest level they will say that. The challenge is in the detail. David's absolutely right. One person's country-by-country reporting is not necessarily what others are seeking. I don't know about my chief executive, never had to ask him, but we do report country by country the payments we make. We also report what we collect on behalf of governments, which in total we pay over $20 billion and we collect in duty and VAT $85 billion, including $15 billion for you, David. So,
thank you very
much. We do have a bit there. But that's just an example of what we actually we are actually prepared to do. But the requirements of country-by-country reporting, depending on which flavour of zealot is pushing forward the legislation, is leading potentially, and this is a potential downside in BEPS, to not just a small number of numbers that are directly there for the purpose of establishing the right level of tax to be paid in a particular country, but they meet every possible NGO and single interest or single issue groups requirement, and it's hundreds and hundreds and hundreds of pieces of information for every single activity that the company is doing, which is of no possible use to anybody, not even the company themselves in many cases. And there's somewhere in between may be the right level, but it's in the implementation, which is also the answer to the original question about BEPS. BEPS has a set of principles, 15 action items. They're all fine. They're all the right things to do. As they are being implemented and interpreted, there is a danger that we end up with something that meets neither objective.
And Jane, Tim, anything extra?
Well, I completely echo what you're saying about country-by-country reporting. I don't think anybody has can realistically say that it's a good way to go forward to not be transparent about tax affairs. But you're right. I mean, particularly for the extractive industries, I mean, it is a ridiculous amount of data. And the worst thing is I don't think it's actually going to help anybody either. So there's got to be a better way.
Yes. Our time's nearly up. So I just want to dive in for a quick question of my own. I just want to follow up on Jane's point about a feeling that cutting the rate wasn't really a priority anymore. I just wondered what people's experience was when you talk to other governments who I imagine will eye up the UK's success, growing success in attracting investment, and don't you expect them to follow suit? I mean, has the race to the bottom really ended?
It is a dynamic environment, and that's why, in my remarks, I want to convey the view that, yes, I think we have got to a very competitive position, but any government that then says, we can put our feet up, we're done now, we've ticked that box, and that's it forever and ever. I'm not so sure about that. It is difficult. I mean, not that many countries have been pursuing the same approach as us in terms of cutting rates at the moment. I remember having a conversation with my equivalent in one of our competitors, and he was saying, look, it's really, really difficult for us to do that, and politically it's quite difficult. As it happens, we've found that the rate cuts have been popular. I think the public have understood that it's been a good thing, but interestingly, when you're knocking on doors, it's not always the top thing that people ask for when you're canvassing is cuts. Although, as representing South West Hertfordshire, if I call on Paul's house, then I might get a different answer. But so other countries haven't necessarily gone down that route. But I think you raised an interesting point, Vanessa. I think other countries will look at what the UK have done. I think they will see that this is evidently a policy that is working well. And so we should anticipate that other countries will move. I think there are advantages for us as first mover, but it's also a reminder that one way or the other, and there are difficulties, frankly, with getting a rate below 20% for a number of structural reasons, but it does demonstrate that the need to be competitive and make reforms as and when continues, even though we've made very great progress in the last 4 years.
Yes, just make one point. Competitiveness is about far more than the rate. It's the holistic system: simplicity, clarity, stability, the ease of dealing with authorities, the speed at which you can work, and the integrity of the overall system. Much more important than further interest rates, further reductions in the rate.
Great. Well, I'm afraid our time is up, so there's just time to say thank you very much to all our speakers.